Hello again, traders. This is another follow-up for the Lux Algo algorithm software that is you purchase on TradingView. I have a link in my description. Um, so I'm trying different things here because I get a lot of questions on which time frame is best to use. So and I'm also reading a lot of books, trading books, and I've read this long time ago, but I've rediscovered it, which is for scalping. Best time frame is the 2 minutes. So I'm not sure if you can get this free on the if you can get it on the free TradingView, but I have the prescription for the TradingView. So I tried this. I'll show you some of my trades this week. I did have a big loss here of 12 pips, and that was totally my fault. I kind of hoping for a turnaround, a rookie mistake. If the trade doesn't work out, you should get out right away. And I think this was before I implemented the 2 minute time frame. So this was the last 3 days here, or last 4 days from 9:15 to today. So today I got pretty good, 2 good trades right here towards beginning and end of the day. So these are the pips and these are the dollar amounts. So back to this. So the 2 minute time frame. So you're gonna add a simple moving average of 20, which is this white line right here, and another moving average, simple moving average 200, which is that red line, and plus the Algo settings. I did mess around with the settings, but I found that these are the best settings right here. The sensitivity is set to 6 and the agility, as you can see here, 1.96. So the way to do this is you're pretty much ignoring the buy signals if the price on the 2 minutes is below the 200, and you're ignoring so opposite of the 200. So above the 200, you're ignoring the sell, even though it might work out great, right? But that's 2020 hindsight, right? So this is a perfect setup here. So let's say the algo keeps giving you buy, so ignore it because it's below 200. So strong sell. So this would have been a good sell right here, right? So this would have, like I was saying before, it's the best thing to do is cut your losses very quickly. Don't try to fight it or double down or anything like that. That's, or typical mistakes. So here, so if I was doing this in real life, with real time, so this is a strong, I would take it. 2 minutes, you're up like from 18 to 2 pips, and then you saw the shooting star, you thought, all right, it's gonna go back down. But the very next candle here, it closed above this 20 moving average. So that's you get out of it's a loss. You get out with a loss. So you got in at 18.5 and you got it at 20. So you lost about 2 pips. Okay, and then you gotta buy, but you ignore it because it's below the 200. You gotta sell here, candles below. Again, this seems like an awesome sell, right? So you take it, and 3 candles later, you lost that one because you got in at close of this candle at 20, and you got in at 24. So that's 2 losses. So 2 pips here, 4 pips here, 6 pips. Okay, yeah. This one strong buy, ignore it because again below the 200. This one you sell. So if you look on the right side here, the price is 19192. You can also look up here on these numbers, the close. So the close here is 192. Okay, and then goes against you a little bit, but never closes above this EMA. and you're not gonna get out. I know you'd be tempted to get out once you get some profit, but don't do that. And here's this is a support that's drawn, previous support, and this candle just blew right through it, which is a very good sign that it's going to continue. If it hesitates and bounces around for more than 3 or 4 candles, then I get out, because chances are it'll go back up or continue. So this is a good sign that it closed right below that line, and then keep on going. Like I was saying here, this is a previous support. I know the software stops drawing this line when it gets a new line, but you can still use it. So here, you can imagine here, price just kept bouncing up and down around this line. So that's give you plenty of chances, or plenty of warnings that it's not gonna continue. And sure enough, if you want to wait for it to close above the moving line, then you would get out here. So you got in at 92 or 19.2, 135.19.2, and you got out here at 135.03, 135. So from 18, so you got about 15 pips. Not bad. And these are how many candles? It's from 1642 the time to an hour. So 15 pips. I mean, all you need is 10 pips. 15 pips in 1 hour, and you're gone in 1 hour. So you don't have to stick to the monitor all day long. So anyway, this is how I trade the time frame. I trade earlier. I think it was on the 5-minute on the other pair. GP. I think I did earlier this week around 6 a.m. I believe, which was 1300. Yeah, I took a buy here. This is before I started using the 2 EMAs. And I got out here when I saw these candles not changing into green. So I missed this whole big move here, but at least I got like 10-15 pips out of it. And my option trade was going, and on the option trades, I trade the daily time frame, because I'm not gonna stock options. You know, you gotta give it time to breathe. So if you remember, I bought the October 16 expiry at the strike price of 97.5. So it went as high as this at 101.25, and that was, I believe, if I would have closed the option at that price, it would have been a 25% increase. So I didn't. So I think at one point my option was valued at $575. I was up $125, but I thought this was a very strong candle. I thought it was going to continue on to retest this high. So we'll see what happens next week with the stock option trading. I need to check it once a day, so it's low stress, high return. So I'm just experimenting with this software on trading stock options. I hope you found this helpful. If you have questions, comment below or send me an email. Thank you.